Good morning, ladies and gentlemen, and welcome to the SERINUS Energy Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab that's on the right-hand corner of your screen. Just please simply type in your questions and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company will review all questions submitted today and, where appropriate, publish responses. These will be available via your Investor Meet Company dashboard, and we'll send you an email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and if you would give that your kind attention, I'm sure that'd be most welcome and appreciated by the company. And I'd now like to hand over, if I may, to Jeffrey Ord, CEO from SERINUS Energy. Good morning, sir.
Good morning, everyone. Thanks, Mark. Welcome, everyone. We're here to discuss the financial results for the 9 months ended the 30th of September 2021. As usual, we have a brief presentation that myself and Andrew will run through, and then after that, we'd be eager to take any questions, answer questions. We have on the call myself, Andrew Fairclough, our CFO, Stuart Morrison, our COO, and Calvin Brackman, our Vice President of External Relations and Strategy. So between the four of us, I'm sure we will be able to answer all of your questions. The 9 months so far, we have had very good revenue, $26 million of revenue. Certainly that's partially due to the strong commodity prices that we're seeing. And in looking forward, we don't see any reasons why, at least through the winter, those very strong gas prices that we're experiencing wouldn't continue. So strong commodity prices and good revenue generation. So we're very happy with the revenue. We have net income for the 9 months of $836,000. This is the first time ever in the history of this company that we've had 9 months of net income. The company's been around for quite some time, and we're very proud of the fact that this is the first time we've ever been able to achieve this. Certainly we don't look at income as being a great predictor of value for this business. We're a growth company. We look primarily at cash flow, but this is a real achievement to get ourselves into a positive net income position. It has been busy operationally. In the quarter, we drilled the Sankrai 1 well, which I think we've reported on. We've said that we were taking a look at the results of Sankrai to see what to do. And in the formal presentation, the accounts, we've said that Sankrai is suspended. It will remain suspended. We have other work that we think is a higher priority to do right now and other uses of our capital. It doesn't mean Sankrai is going to be abandoned anytime soon. We're still considering what we might do with it. But I think the results of Sankrai were very clearly presented to the market, and that remains where we're at with Sankrai. We're moving on with that being an option sort of in the back pocket. Production for the period, that's the 9-month period, is 1,810 barrels of oil per day, with Romania at 1,200 and Tunisia at 568. I'll talk about both of these. Romania, we continue to see the natural declines that we have predicted. The compression, which will offset those declines and extend the life of the field, is now in position. The first compressor unit arrived in the field, I think it's, Stuart, October 23rd?
Yeah.
October 23rd, it was in the field. And that is being, the commissioning and the final tweakings of making sure that that's performing properly are ongoing. That was the installation of that compressor was aligned with the annual plant turnaround where we do the maintenance on the plant. So we tried to put those together so that we had the compressor coming in at the same time as the plant was going into turnaround, and that was executed in the middle of November. Tunisia, production 568 barrels a day. This is now onto a situation where we're maintaining the pumps and we're keeping the production stable until such time as we can get the artificial lift in place. Artificial lift, we had expected a pump in December. We've been notified that that pump has been delayed into the first quarter. Rather embarrassingly, on the last call, I couldn't give a date for the delivery of that pump. And rather embarrassingly, on this call, I can't give a date. logistics and the global supply chain is really playing an impact on this. Schlumberger is doing a part of the pump in Singapore, a part of the pump in Houston. We are on standby with air freight to move that pump from Houston to our field as soon as we can. So we're not going to rely on sea shipping. We will air freight that as soon as we can. But there's very little we can do with the Schlumberger supply chains. That holds true for many of the things in Tunisia, many of the things in our business, to be honest. Supply chains are starting to affect places where it's hard to anticipate. For example, we will need, for the workover to do the West 1 artificial lift, we'll need mud and kill fluid, 147 tons of chemicals and mud and kill fluid. That's not something we can air freight. And that is, we're suffering the same delays that every cargo ship is suffering right now. So we are saying that we're going to be doing this in the first quarter. That's our expectation. Everyone is working very, very hard to make sure that comes to fruition, but it is very difficult with the global supply chains. In Romania, with the compression, as I said, Maftina 1003, the unit is in the field. The 1007 compressor is due to arrive in December for commissioning. That is on schedule, and that is on time. Now, we are suffering a very, very severe outbreak of the pandemic in Romania. We have had to go back to sort of early 2020 type protocols. There's restrictions on moving between counties. There's certainly restrictions on moving across the border into Hungary. Now, how does that affect us? Well, the best example I can give you is there's a Linde industrial gas plant 22 kilometers from our field where we get our industrial gases. However, that's 22 kilometers across the Romanian-Hungarian border. When that border gets shut, we have to get our industrial gases from 800 kilometers away. So it's little things like that we have to anticipate in the business. Largely, we're anticipating these things. We're trying to mitigate where we can. But the pandemic and the supply chain are delaying things, and we have very little control over that. So the good news is, financially, it was a very, very strong quarter. We're looking forward to the fourth quarter where we get some of these, the compression in place, and we get moving on artificial lift. But there are delays that we're suffering, that the whole industry is suffering, and we are not wholly in control of those delays. I'll hand over to Andrew to do the financial section of this presentation. I'll come back at the end, and we'll have a further chat at the end, and then hopefully I can answer some of the questions that have been sent in, or some of the questions that people enter into the question column.
Yeah, thanks. So looking at the financial highlights before we then move into some further slides around this, as Jeffrey said, net income. First time we've achieved this as a business, net income of $836,000 against a net loss last year, which included an impairment of over $13 million. Realized oil price for the 9 months, $52.62 per barrel. Again, we're seeing the impact and benefits of a strengthening commodity price, and that's also reflected in the gas price for those 9 months. And I'll talk a little bit about current pricing when we move into the slide. Revenue for the period, nearly $26 million, and that is a strong reflection of where the business is now positioned. Operating netback, that has strengthened to $34.13 per BOE. Again, strong performance in Romania and Tunisia. Capital expenditure through the year was $9.3 million. That was primarily in Romania, where we drilled the 1008 well and also Sankrai 1. And Tunisia was very much more reflective of a steady series of workovers in the fields. EBITDA, nearly $9 million. That's $1 million a month through the period. And our cash balance for the 9 months is $6.4 million. So looking at gross revenue, you can see the step up and against the last year. So we delivered over nearly $26 million against $18 million for the 9 months in 2020. Cost of sales have gone up slightly to $21.3 million. It's primarily due to, and you can see in the bottom left-hand chart, primarily due to increased royalties and windfall tax, which offset a lower depletion and depreciation charge. Gross profit, $4.4 million, and through to the bottom line, positive, net income of nearly $1 million. Production, you can see the trends here. As we said, we've got stable production in Tunisia, and we managed to complete the workovers through the middle of the year, and we expect to see those to continue to stabilize, if not slightly strengthen Tunisian production. The production volumes in Romania, as we've been continue so highlighting, these are shallow wells with a natural decline curve, and this is what we're seeing. The introduction of compression in 1003 and 1007 should look to alleviate and stabilize those. Pricing, again, no surprises there. The strengthening, I think, average Brent oil price in October was nearly $84 per barrel. Today, when we've had a bit of an impact, it's $76 per barrel. So again, there's further strengthening in the fourth quarter. And similarly, what we've been seeing, sort of the day ahead pricing in the Romanian exchange through October was around the $30 per MCF level. So there's further pricing appreciation to come through in the fourth quarter. Production expense, slight increase to $6.6 million from the comparative period last year. There's a historic mining tax that we were hit with in the first half of the year, which we've already flagged. And there's also a bit of deferred 2020 OPEX, so through which we sort of restrained through the pandemic months of last year, which we've sort of accelerated into this year. But on a BOE per basis, you can see the stabilization in Tunisia, and the Romania's reflection of the production. All in all, though, looking through to operating netbacks, as I mentioned earlier, a very, very strong strengthening against the comparative period. We've nearly doubled our operating netbacks at the group level, and despite sort of increases in royalties, particularly, we've achieved nearly $38 per BOE in Romania and just over $26 per BOE in Tunisia. So a good, strong, robust performance there. Capex, already highlighted that, very much a case of workovers in Tunisia through the year, ahead of the program next year, and Romania is very much a reflection of the two wells that we drilled through the year, Moftina 1008 and Sankrai 1. So we did $9.3 million of Capex in the year to the end of September. Again, strong funds from operations, very strong, resilient performance, nearly $8 million. The only sort of here with corporate, it's slightly increased $3.3 million, but that's entirely a reflection of FX rates and the way we're accruing for audit fees through the year. EBITDA, nearly $9 million. Little more to add here, I think. Again, it just reflects the cash flows and the components of that, but really underpins the fact that we do have a very good, strong cash-generating business at this period of time. Cash is $6.4 million. There is an element of timing of that as we've concluded our Capex program for the year, and about to sort of launch into the next phase of that next year, 2020. And with that, I will hand it back to Jeffrey.
Good, thanks, Andrew. So for 2022, I think we have literally just come off of our board meeting last Friday to approve our 2022 budgets. We have, as everyone is aware, a big asset base in Romania, and a very, very large oil field that we're going to work in Tunisia. We have designed and started permitting a 2D seismic program covering the next 3 projects adjacent to the Moftino gas project. Now, this is to refine our prospects, help us with well location. And, you know, when we talk about why we're doing 2D seismic now, the seismic that identifies some of these prospects for us, the line spacing, so the distance between the 2 lines, is enough that you could have a Moftino field in between the lines. So refining that is not suggesting that we do have a Moftino field that's just happened to fall between the lines. It's refining how big these prospects could be. And so that's work that we want to do before we start drilling them. So that's ongoing right now. We jumped on that very, very quickly, and we've accelerated that plan. And that plan will lead into the drilling of 3 wells in late 2022, or in the latter half of 2022, on those 3 prospects. So the planning, the permitting, and getting everything in place for a 3-well drilling program at the end of 2022 in Romania is now underway. In Tunisia, we have learned from 2021 that we need to accelerate partner approval. I think we talked on the last call that we had submitted budgets to Etap in November of 2020. We finally got approval for that in late May of 2021. So we're already putting our next plans in front of them, trying to accelerate that. So the partner approval will not slow us down. And certainly we're having to order pumps earlier given the supply chain issues that we've seen. In the southern Tunisian assets, Shwesh and Esh-Shwesh, we have opportunities to continue to increase the production in those fields. Same sort of thing, putting pumps in older wells. We also are going to look at the opportunities for the deeper gas. So there are deeper gas zones beneath Shwesh and Esh-Shwesh. These are the gas zones that OMV found all the gas for the Nawara pipeline system. So we're very, very interested in now moving to the next phase of looking at the southern fields, and that is looking at the deeper gas prospects in those fields. A strong, financially, this has been a very strong year for us. We're now in a position where we can start to look at things that are more value accretive for us in 2022, and that's what the plan is. Our budgets for 2022, we've got a capital budget of $24 million. Andrew's nodding. And we've got that budget at budgeted numbers of $65 a barrel for oil and $8 an MCF for gas. Casual observers will note that those well below what current commodity prices are, but we'll run those budgets on a conservative basis and execute the capital plans on a fairly conservative basis. So we have a very exciting and a very aggressive plan for 2022. It's a challenge. We're a small company. Like we've seen with pumps with Schlumberger, we were ordering 3 pumps from Schlumberger. We're clearly not at the front of the queue. The pressure we have on a 3-pump program is limited. So we do whatever we can, but those global supply chain issues affect us, and there's no point in suggesting they don't. ESG. We have continued with no lost time incidents. We're now at 2,000 days with no lost time incidents in Tunisia and 950 days. So that's since the first day of production in the Moftino facility. On the 18th of September, we passed the milestone of 1 million man hours without lost time incidents during our drilling, workovers, and well intervention program in Romania. So we're very, very happy with that. Moftino is a very, very modern plant. So the fugitive emissions are low. And so what we can do to accelerate and to highlight our emissions there is to reduce dependency on the scope 2 emissions, which is the power consumption from the medium voltage line. To that end, we put solar panels. It's not the best picture. It's on a cloudy day, of course, but we put solar panels on the top of all of our units out there, and including the shed that we store our chemicals in, which is a big roof surface. That really reduces our reliance on that medium voltage line. And those who know the energy mix in Romania will know that almost 50% of the energy mix is coal. So we're reducing the consumption of energy that's generated by and large with coal, and really trying to focus on the reduction of emissions. We have had our fugitive emissions audited by third-party independent consultants, both in Tunisia and more recently in Romania, for over 10 years. So we every year have a report done, and this year we will combine those reports into a sustainability report to show our fugitive emissions, to show what we've been doing to try to reduce the impact of our operations. Now, clearly, we're an oil and gas company. We reduce our Scope 1. Those are the emissions that are directly our responsibility from our facilities, and we try to minimize our Scope 2, which are things like consumption of power from a grid. And this, I hope, will show that we're doing everything we can to be the most sustainable company we can. I think that's the end to the formal presentation. We would be very eager to answer questions, so please, happy to answer.
That's great. Jeffrey, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Jeffrey and Andrew and Calvin take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation's ended, we'll redirect you in order that you can provide the company with your views and expectations. Jeffrey, Andrew, Calvin, we did receive a number of pre-submitted questions, and if I may, I'd like to start off the Q&A with those before turning to the live questions. We received two around dividends, so perhaps I'll just read out the first one we received. Considering business cash position, wouldn't it be fair for investors to offer a percentage of profits as dividends moving forward?
Absolutely. Philosophically, the company has always believed in returns to the shareholder, and dividends are a feature of those returns. Going back to when we moved the company from Alberta in Canada to Jersey, Jersey was chosen because it's tax efficient to make distributions to the shareholders from that jurisdiction. So there was a plan as far back as 2017 to make this company as efficient as possible to distribute to its shareholders. Now, distributions and returns to shareholders take a number of guises. The first step on that was having the AGM and having the shareholders approve our ability to buy back shares. And that was approved, and so we have that capacity. And we very, very carefully and tactically look at that capacity almost every day. And so certainly that is a shareholder return that we contemplate all the time. As for actual dividends, where we're at right now, I think we've talked about an aggressive growth program and capital for 2022. We believe that the best use of our capital now is to grow the business and to invest in some of our high returning prospects, high returning assets. Simply getting Sabria to produce more is a very, very good return on our investment. So right now what we see is our capital is best spent on growth. When those growth programs are successful, then absolutely we'll be in a position where cash is, we're generating enough cash flow that we can look at a sustainable dividend. And I think one of the important things with dividends is we don't do them a spotty sort of here, there, some this year, none next year. I think dividends need to be sustainable to create value for investors. One of the real difficulties with dividends right now is, there are some very, very high dividend yielding companies out there in the oil and gas space. I was looking at Lukoil last week with an 11% dividend yield. This is not something we'll ever be able to compete with. So we can't look at dividends as being trying to attract yield chasers. We have to look at it solely as trying to return value to our shareholders. And when we do that, we have to look at the value we create from investing versus the value we create by returning capital to shareholders. So that's a bit of a long-winded answer. Philosophically, we are very much in favor of distributions. We're also a growth company. Every dollar that we take away from that growth right now, in the form of a distribution to our shareholders reduces that growth slightly. So we'd like to get to a higher threshold of growth, higher threshold of capital, of cash generation before we start really considering dividends.
Thanks, Jeffrey. Turning, if I may, to the next question, will you consider a reverse stock split? Our current share price prevents some institutions or funds from investing in SERINUS because they simply have rules that prevent them from buying penny stocks.
Yeah, again, we've looked at that. We've done our analysis of that. I think there are absolutely some institutions that are unable to buy penny stocks. But on balance, I think the problem is less to do with the number of shares we have outstanding. It has to do with, there's a very, it's a difficult investment for some funds on an ESG basis to invest in oil and gas. And I think that is the bigger problem. And I don't think a share count resolves that problem for anyone in oil and gas. If you look through AIM companies, there are companies that have far fewer shares than us and therefore bigger share prices that don't show a kick up in liquidity or that don't show a fundamentally different register. So if we could go through and we could see that actually instead of 2p, a 20p share price would attract a different register, if we could see evidence of that, then yeah, we would most certainly consider that. But I think the conclusion we've made from some of our analysis is that there are bigger problems that the industry as a whole is suffering on investment than sort of the penny stock and number of share count. But absolutely, we understand there are some institutions that don't invest on penny stocks. The bigger proportion are institutions that don't invest for ESG reasons. So I don't think we would create the liquidity that would help. Now, if we were to do a transaction and this was part of a transaction, then certainly we could look at that as something to do at the time of that transaction. But to go out today and just on its own independently do a reverse stock split, I think our analysis says that would be capital spent on documentation that is not really going to generate a great return for us.
Thank you very much indeed, Jeffrey. I'll read out the next question in full, if I may. The question reads as follows. It's a question to you, Jeffrey, dear Mr. Auld. You kept stating how undervalued it is on AIM. At the same time, approved share buybacks, which have so far never materialized. All planned investments seem to be delayed with lack of updates or explanation to the market. The production keeps falling to no operational actions taken to prevent or slow down the decline. Apart from self-praise, could you update investors when they could expect positive developments, please?
Good. Interesting question. You keep stating that how undervalued it is on AIM. Well, absolutely. I think as of this morning, we're trading at 1x revenue. We have generated $9 million of EBITDA, $1 million a month of EBITDA. We have continued to build the financial position of this company, going from a heavily levered company that was unable to satisfy its debts requirements, pay its debts, to a company that has no debt and is generating cash flow, EBITDA, and for the first time ever, 9 months of positive net income. So yes, I do believe it's undervalued. I believe it's severely undervalued. I think that's probably better than a CEO that believes it's overvalued. But clearly the financial metrics and the reserve metrics show that we are undervalued. That's a function of how AIM is trading, as a function of how oil and gas is trading. And look, there's specific functions to us as well. But yes, we are undervalued. Share buyback has been approved and never materialized. Yes, we have decided that we look very tactically at that share buyback. We got that approved for shareholders to give the board and the management the flexibility to buy shares when we saw it to be appropriate, when we saw it to be value accretive. That remains our strategy. There's nothing to be ashamed of about having a share buyback and having not executed it. We have actually found uses for our capital that we believe, even right now, even with the valuation numbers, are a better return for shareholders. We do our analysis, we make those judgments, and that's how we run the business. This is a growth business, and we are very, very eager to put our capital to work to grow it. All planned investments seem to be delayed with lack of updates or explanation. We update everyone quarterly. If there's anything between the quarters that is material and outside the normal course of business, we are very, very quick to update. I think if you look at our well reporting through the course of this year, you will see that that is absolutely the case. We've talked repeatedly at our quarterly updates about the delays that we and the industry are suffering. I very much would love to tell you that there's no delays with Schlumberger. Everyone else in the industry will tell you that there are delays, and that's not criticizing Schlumberger, that's everyone. There are delays all across the industry. We talked about the mud and the kill fluid delays. Things like a tubing hanger for a workover that usually take about 4 weeks to get from Weatherford are taking 4 months. There's no stock on shelves. Companies are running behind with fabrication. Fabrication is being interrupted by the pandemic. And then once you get the stuff fabricated, the shipping delays are there. We have not ever tried to disguise the fact that these are delayed. But you need to understand that this management and this company and every single person working in the field is doing everything we can to accelerate this. No one wants to see these delays. No one likes to know that we have great growth out there and great projects, and we can't do them because we can't get a pump from Schlumberger in time. We're addressing them as best we can, and we keep working on that. Production keeps falling for no operational actions taken to prevent or slow the decline. Well, we've highlighted that this is a shallow gas field. If you look at page 16 of the Gaffney Klein reserve report that we publish on our website, you will see that we're tracking exactly the declines we have predicted. And no operational actions taken. I think that really belittles the hard work that's gone on in the field to get these compressors in place and to do everything we can to accelerate the mitigations of those declines. Those declines are following along the lines of what the reservoir engineers and we had predicted. So page 16 in the reserve report shows exactly what those declines were predicted to be, and we're on track for those. So no, we would always like to have a magic gas field that never ever declined. Unfortunately, we don't have that. We have a normal shallow gas field. The compression is being put in. The delays that we suffered on the first compressor, we are not suffering those on the second compressor. So we've managed to iron those out with the fabricator, and we're working to prevent the declines as best you can do. Nature is nature. Apart from self-praise, could you update the investors when they could expect any positive developments, please? Well, you know what? I think we're owed self-praise. I think we deserve self-praise. We have, in 2019, created a brand new business unit in Romania that this company never had before. We have, in Tunisia, managed to get the engineering and the design of an artificial lift program onto a field that has no pumps, that has never been done before. Those are two very, very impressive operational achievements that I believe we should be praised for. Our cash flow is strong, and not just because of commodities, but because of the production that's increased from when I joined. And as I said earlier, and as Andrew said, for the first time in 9 months, for the first time ever, we have 9 months of positive net income. That is very positive development. We've removed the debt from the business. When I joined, there was $54 million of current liabilities, including that debt. We've managed to reduce that down to a reasonable balance sheet level. So yeah, that's positive. What shouldn't we pat ourselves on the back for? Well, we need to accelerate the growth. We know we have the growth out there. We know we have the assets. We know that 2020 was an interesting year. 21, we managed to get rid of the debt at the end of 20, and we need to now accelerate that growth. So certainly there's self-critique that goes on, but yeah, there is self-praise, because I think from the starting point, we've now got a good, solid cash flowing business with plenty of growth going ahead of us. There's 73 million barrels of prospective resources surrounding Moftino. There's 445 million barrels of oil in place in Sibria. All of these are good assets that we can do a lot of growth with. So some of that self-praise, I think, is very well deserved. And I apologize if people think that the self-praise isn't deserved, but I think this business has done, from the starting place we took this business from to where we are now, I think we owe ourselves a little bit of praise. I wish the share price would reflect the good works that we've done.
Thank you, Jeffrey. And if I may just turn to the final pre-submitted question, which reads as follows. Do you have any updates on the windfall tax in Romania?
Well, I'll let Calvin help me on this one. I'll start by just saying that I think it was the first quarter call where, I first sort of commented that the pandemic will create a higher tax environment for extractive businesses around the world. That's simply because governments had to spend so much on the pandemic, and extractive businesses are always a tax target. So I think that in the medium term going ahead, we will experience taxation pressures. We'll mitigate those as best we can, but taxes will generally across the globe and across the extractive business, they'll rise. Specifically to the windfall tax, I think addressing the windfall tax when we're selling gas at $32 an MCF in Romania right now, it's a tough one because there's a company that's earning $32 an MCF complaining about the taxes. It is an unfair tax, and it is a tax that I think prohibits investment. But it is a tough argument right now. Cal, do you want to fill in on the specifics of what we're talking about with the government right now?
Yeah. We continue to push the government of Romania on the windfall tax. It's as Jeffrey said, at $32, it's tough to make the argument. But our problem is when it's $5 or $6, it still has a tremendous a significant take from the business that we can't use to invest in wells and to grow the company in Romania. And overall in Romania, what you've seen since the tax has been introduced is the domestic gas production has steadily declined in the country, and they've had to rely more and more on imports. Romania spent $1.5 billion on imported gas since the start of 2020, which probably exceeds the amount that they collected in windfall tax. We think it's a better policy if they would encourage domestic production and become a growth industry for the country going forward, including being able to export gas. We have an interview on the Energynomics website. It's energynomics.ro if you want to check a more detailed explanation of the windfall tax.
Yeah, that interview is also on our website. So if you go to the front page of the website under interviews, that interview is posted up there. So do take a look, because I think we articulate very clearly why we think it's a bad tax, why we think that there are different ways for the state of Romania to tax its resources while still allowing growth. So it's a good read. I think we've tried to articulate very clearly what our position is in that interview.
That's great, Jeffrey. Thank you, and to Calvin for that. Well, that takes care of the pre-submitted questions. So thank you to everybody that took the time to submit questions, and those, of course, that submitted questions during the live event. Jeffrey, could I just hand back to you to read out any questions from the live Q&A panel, who it's from, and give a response where it's appropriate to do so? That would be fantastic.
Great. So we have a question from Powell M. Dramatic drop in production in Romania in Q3. What can we expect in Q4? I think we can start to expect the mitigation of that drop with the compression. However, that's going to be offset by the fact that we had our plant turnaround in November. So there's a little toing and froing there, but I think any sort of stabilizations will come through in the first quarter, and you'll see a continued drop in production in the fourth quarter, where the compressors offset the fact that we have our annual turnaround. And our annual turnaround will show the same sort of interruption in production. I think it was 7 days. 7 days we spent with the plant down, being cleaned out, repaired, and turned around. So there'll be 7 days in November where there is no production. But that's an annual, or it has been for the last couple of years. I don't think we're scheduling a plant turnaround next year. We've done the work this year so that we can go through the plant without turning it around in November of next year. James S. asks, in terms of stabilization and extending production with the artificial lifts, what do you expect to increase production by? I think, James, we need to separate the stabilization and extension of production that we're doing in the southern fields with just pumps in existing wells, with the artificial lift, which is new pumps in Sabrina. So in terms of stabilization and extending production with pumps in the south, that'll continue on the trend that we've seen in the past few quarters. In terms of the artificial lift in Sabrina, I'll refer you to I think it's page 23, 22. Our corporate presentation that's up on the website. That's the slide that has the expected incremental production from each pump that we put in. And so we think that's a third-party engineering study. That's a study that we think is valid. And that shows that the West 1 well, we expect an incremental production of 796 barrels a day, so 800 barrels a day from the installation of that pump. And you can see on that far right-hand column on that slide, the incremental production we would expect from each well. So you can see why we're trying to accelerate this, get our partner to approve the capital, because these are very, very material increases in production. And that's what we're looking at for 22 as the increase in our production. Towards the tail end of 22, we hope to have successes in in the 3-well drilling program in Romania. But the bulk of production increases will come from the Sabrina pump program. So that's laid out in the corporate presentation. It's the Sabrina artificial lift program page, and we haven't changed our expectations from that. Now I have a couple of questions on production forecast, but I think I would reiterate that we don't give guidance on production. We tell you what the projects are, what we're doing, and the timing of those. The results, in some cases, like the artificial lift program, where we have third-party engineering reports, we'll put out what the expected production is. But by and large, we don't give production guidance. I have a question from Nicholas S. Morning, gents. A couple of questions for me. What is the magnitude of the price benefit you expect to capture in Romania post the gas trading subsidiary? What is the Capex split for 2022 development and exploration? Calvin, do you want to talk about SERINUS Energy Romania trading and how that will change how we're getting what we're receiving on prices in Romania? And then Andrew, I'll ask you to answer the second one, the capital split for development versus exploration. And that capital split will be simply Tunisia versus Romania. Tunisia will be development, Romania will be exploration. But Calvin, do you want to answer the first question?
Yeah, sure. Up to the end of Q3 2021, we've sold our gas in Romania under a gas sales agreement. And with that, as these companies, the pricing formulas of these agreements are average prices usually. And what we've noticed in Romania is the high volatility, especially on the day-ahead market, versus those average prices that we get through a GSA. So with that, we decided to start our own trading company, SERINUS Energy Romania Trading, to be able to capture the value that we're losing and really improve the prices that we get. And with that, we hired experienced traders. We have excellent controls in place, and so forth. And we think this is going to be a tremendous benefit to our realized price going forward.
And regarding Capex, I mean, as Jeffrey said, it's broadly split between Tunisia is very much development-led. We have a program to install, or certainly start as well, the installation of 3 artificial lift pumps through the course of next year. and about 5 workovers across Sabria and Schwesh. So that is all very much, if you like, development oriented. And in Romania, as we've sort of previously mentioned, we have a Capex program that consists of the 2D seismic, culminating in a 3-well exploration program in the back half of the year in Romania.
Good. Sylvester, is there a chance to increase production by, for example, 30% over the next 2 years? Well, without going directly to production guidance, I will allow the new guy, Stuart Morrison, to opine on some of the opportunities he sees in increasing production. Stuart?
Yeah, thanks, Jeff. The answer in short is we have the projects to be able to do that. Jeff referred to the table on the pumps just as one example, but we have other workover ideas. We have an exciting program coming up in Romania, and we want any successes in there to be on stream as soon as we can. So, in answer to your question, yeah, I think we do.
Yeah. Good. Nick L asks, we mentioned accelerating ESP installations in Tunisia. When do you think you do ESP installations at SAB 3H and Win 12 BIS? Yeah, accelerating these pumps is really, really important to us. Now, again, the things that are outside of our control is our partner. So what can we do to accelerate that? Well, we can get them things a lot earlier than what we had been planning to do. The difficulty with that is we know that Etap will not approve the next pump until they see some results for the first pump. So we'll have to show results from the W1 pump before we will get approval for the next pump. Now, we as a company are prepared to take the risk to parallel path and have pumps going in before the results of the previous pump program are demonstrated, because we've done the engineering, we've done the work, and we know what to expect, and we believe that we'll be able to adjust these pumps as we're going along. But we know that our partner is not comfortable with doing that for a couple of reasons. Firstly, they don't have a broad and deep engineering department that's done a lot of work with artificial lift programs, and secondly, capital in Etap is always tight, so it has to be allocated very, very carefully. Do we think we could get the next pump in 2022? I think we can have a good start on it. I think it would be a real press, and all the stars would have to align for us to get that in place in 2022. But very shortly thereafter, I think we have a very, very good chance of doing that. The more we do this, the less friction or the less sort of contemplation I think we'll have to have from our partner. But there's never been a pump in Sabria, so they rightly have questions about how these pumps would work in this reservoir. We've spent a lot of time looking at that. But the gating item for us is making sure we have partner approval as soon as we can get it. Sean H asked about the gas trading subsidiary. I think Calvin did a pretty good answer on that. Cal, is there anything else you want to add on SERINUS Energy Romania trading?
No, I think it pretty well covered it. It is. I think it will have a significant impact on the realized prices we're gonna have going forward. It's going to be good for the company.
Good for the business. Good. Tim R. Well, thank you, Tim. Generally, no problem with the self-praise. Great to see the numbers improving. Yeah, the improving numbers, and I think financially the numbers keep going and keep going, and that's the real determinant of the degrees of freedom we have to execute further growth. So yeah, it is great to see the number improving. Thoughts on the share price? Look, I think I know that some find it offensive that I think the share price should be much higher. I think every metric shows that the share price should be much higher. Every metric shows that there's peers in AIM that suffer the same problems we do with their share price. I think we're one of the worst, but what do we do to change that? Well, we try to communicate with people. We don't determine the share price. If we did, I can tell you it would be a lot higher. What determines the share price is buyers and sellers. And so we're constantly trying to convince people of the benefits of this business. The benefits of this business are the resource base that we have. The operating environments. Now, Romania is in the EU. It's a stable environment. We might not like all the taxes, but the operating environment there is an environment that we are able to manage. We're also able to manage an operating environment in Tunisia, which is a difficult environment. But we've got good people on the ground there operating. So, some of the good things about this company, I believe, will shine through. And yeah, I do believe that this is a very undervalued stock. And I make no apologies for that. We do everything we can to try to communicate the value. I think that's all the questions we have on the list here.
Jeffrey, absolutely brilliant. Thank you very much indeed. Yes, indeed. And thank you once again to the investors that have submitted questions. And I think you've answered every question that's come through. If any further questions do come through, Jeffrey will make those available to you. I know investor feedback is important, and I'll shortly redirect investors to provide you with their thoughts and expectations. But before doing so, I wonder if I could just hand back to you just for a few quick closing comments just to wrap up with.
Yeah, look, for fear of being accused of self-praise again, look, I looked at these financial results when they came across my desk when we started to compile numbers from the quarter, and I thought these are very good financial numbers. Our audit committee made the same comment on Friday. Very, very good financial numbers mean that the company is in a good place to grow into 2022. I think everyone's had a tough couple of years. 2020 and 2021 have thrown things at us that I don't think anyone ever expected. And so we're looking forward to 2022. We think that we have a really exciting program in Romania, a 3-well program on 3 prospects that we're going to highlight. Definition with 2D seismic is an exciting program. And we're really, really eager to try to get those pumps into the field. And, I get that people are disappointed with the delays. I would tell you that there's no one more disappointed than the delays than the 4 of us sitting on this call today. We do everything we can to make sure our teams are trying to mitigate the curveballs that the world throws at us. But really, in summary, these are great financial results. We have never in the history of this company had 9 months of net income, and that is a real achievement. So we're really happy with that. And that is all I'll say. So thank you for joining us on the call. We very much appreciate the questions.
That's great. Jeffrey, Andrew, Calvin, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SERINUS Energy PLC, I would like to thank you very much for attending today's presentation. That now concludes today's session. Good morning to you all.